Hey, what's up everybody? Tuesday, December 3rd. How you doing? So, market was down today. Actually, we closed better than, we closed well off the lows. Market was down at one point, I think about 450 down, off 450. I think it closed down around 280. I saw an interesting statistic today that showed retail investors, small investors, have been bailing out of the market in the last year, year and a half. Actually, 2018, 2019, they have exited the market in levels not seen. You have to go back before even 2000. So like in the last 20 years, we have not seen a period like this where retail investors have totally pulled out of the market in this level of magnitude. And what's interesting is that in prior episodes where we have seen small investors, retail investors withdraw from the market in such quantities, the following 2, 3, 4, 5 year period has been like amazing market performance. Now this all kind of gels with what I've been seeing in terms of sentiment. Bullish sentiment has been very low, pretty much trending below the historical average for this entire year of 2019. Neutral sentiment, people on the fence, people ambivalent, people cautious, that has been well above the historical average for this entire year, 2019. And bearish sentiment has been roughly hanging around the historical average, sometimes popping up above the historical average, never really getting to very low levels, but not giving an indication in any way that, at least from a sentiment, market psychology point of view, that the market is overdone. So yes, we will have these corrections. I find them to be fantastic. And again, this one, what is the narrative on this one? It's the same narrative that we have seen over and over and over again for the last 2 years, for the last year and a half going back, or 2 years going back to early 2018. And that's been the trade war, right? The trade war, oh boy, the trade war. And every single time, if you've been following my videos, it has been free advice. I said every single time you have these trade war hiccups, these episodes of nervous selling based on, they're not going to make a deal, you had to buy the market. And this is another one of those episodes. So what's interesting about this environment that we're in is that it never lends itself to overconfidence. It's a perfect, bull market. An absolutely perfect bull market, not only really from a psychological point of view, which I've just been talking about. You never see people getting overconfident. There's a very high level of caution and concern and worry. I talked yesterday in my video about how you got these big hedge fund managers, wringing their hands. Oh my God, the debt and the deficit. What are we going to do? It's terrible. It's going to destroy. So from a market psychology point of view, it never gets overconfident. It never gets overly bullish. There's a constant wall of worry, that proverbial wall of worry that the market climbs up. That is always there. And more importantly, underlying the psychology of the psychological environment right now, underlying that, you have real fundamental bullish conditions. You have fiscal support at record levels last year, meaning fiscal year 2019, which ended at the end of September of this year. Record spending over $5 trillion. This year already it is $45 billion above where we were at the same time last year. So you have the perfect combination of conditions that will lead to a rising market. Now, at some point, and you know, the climb, as I said, is not going to be a meteoric rise. It is not going to be parabolic and straight up where everybody gets super bullish and jumps in. No, it is going to be like this, and then you're going to have these pullbacks with these blaring headlines, always the same headlines, right? Or something of this nature. Some, you know, catastrophe is about to happen. Usually, you know, it's been mostly about the trade war, but then there was the inverted yield curve. Remember that? And I explained all that away. I mean, I'm really the only one. I mean, if you're going to be honest about it, when we had that whole yield curve inversion, what was I saying? I said that was a distortion created by the debt ceiling. The debt ceiling limited the availability of the most important collateral in the world, and that was U.S. Treasuries, at a time when financial institutions needed those treasuries more than ever because tier one assets, meaning bank reserves, were coming down. The Fed was guiding reserves down, and there were no, the supply of treasuries was constrained because the treasury was under the debt ceiling. It couldn't issue anymore. And so you had this inversion where you know, rates inverted. And I said, once the debt ceiling goes away, the whole thing will flip back to normal. Now, who was telling you that? Nobody else was telling you that. Nobody else had that insight. So you had that whole thing going on, interspersed, you know, on a pretty regular basis with these fears of the trade war blowing up. Again, we're having this now, new tariffs, whatever, on Europe. Trump says maybe not going to make a deal till after the 2020 election. So the same headlines. People trying to trade these headlines. I've said it many, many times. I had a guy, a subscriber, months ago. He was like, Mike, this is great. Your work is great. Your work is great. Then one time, you know, the market didn't react the way I thought it was going to react in a very short-term time frame. And he said, what's the use of this? I could just look at the headlines, which you gotta laugh. I mean, bye, goodbye. So he went on his way. But so you have this kind of environment where nobody gets committed. Nobody wants to get committed. Nobody gets overly bullish. And this is a wonderful, fantastic environment to have. Fantastic environment to have. And this is something that can be sustained for a long period of time. Frankly, I hope this trade situation continues as is, just as Trump said today, until after 2020. And beyond that, as far as I'm concerned. Because it just creates this absolutely fantastic environment to trade in. It creates a fantastic environment to build a very, very meaningful position, because each pullback you can add to your position. Then the market advances. You have more profit. You have more equity. You have more capital in your account. The market pulls back. You add some more. It's like a stair step. It goes up and up and up. And each pullback, you could add some more at a cheaper level. That's dollar cost averaging on the way up, which is even better than dollar cost averaging on the way down. All right, so I like it. I like what's going on. It's great, but you have to, have your mental game intact. You have to understand what is going on. Otherwise, you are going to be whipped around by the headlines like everyone else, like all the sheep out there. You're going to do the wrong thing. You're going to sell at the bottom. You're going to buy at the top. You are going to allow blogs like Zero Hedge to scare you out of positions. But for me and for my subscribers, we're fine with that. We're happy with that. Keep on doing it. Keep on doing it. So yeah, everything is looking good. We are in this period right now. It's a very short-term period of, monetary condition, a little bit negative for the market. But again, that's a trading situation. It is not the big macro situation. The big picture, as I just spent the last minutes telling you about, is very, very, extremely positive, I would say. It's going to stay that way for reasons I have explained so many times in the past. and probably will continue to explain, and most people are not going to make money in this environment. You just don't know how. You don't have the training, you don't have the information, you don't have the understanding, and that's a shame, because that all can be had. Again, go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader or my daily Forex signal service, Zombie Trading. By the way, the dollar slowly in a decline now. If you look at the dollar against some particular currencies, a clear breakout from near 2-year trend up, so, or breakdown I should say, but I guess that's a topic for another video. All right, everybody. See you tomorrow. Bye-bye.